Hello and welcome to interest.co.nz. I'm Gareth Vaughan and I'm joined by Dan Bell from HiFX with our monthly look at currencies. Dan, welcome in.
Thank you.
I guess the big news over the weekend is the US non-farm payrolls report. How did that come in?
Yeah, so the US employment numbers on Friday night, New Zealand time, came in at 192,000 new jobs for the month of March, and the unemployment rate held steady at 6.7%. So pretty close to expectations. I mean, the market was hoping the jobs growth would be around 200,000 new jobs. And I think we were positioned going into that number expecting something over 200k. So even though it didn't miss by much, there was a little bit of positioning which saw the US dollar come under a little bit of pressure actually against some of the majors, and US Treasury yields came off as well. So it was an interesting reaction, but again, positioning probably more than anything. But overall, if you actually dig into the number, there was some positive aspects to it too. Last month was revised up, and the participation rate in this month's number actually went up, but the unemployment rate remained steady. So effectively more people in the job market, but the unemployment rate remaining on hold at 6.7%. So that's reasonably positive outcome. And the US, I mean, if you look at the last 6 to 12 months, I mean, the US are effectively producing 190,000 new jobs a month at the moment. So I think their economy continues to be on track and continues to recover.
Now, in terms of the Federal Reserve, all of this would leave them on track, I guess, for people to expect that they'll continue removing their monthly or reducing their monthly bond buying, so-called tapering, by another 10 billion at the next FOMC meeting?
Yeah, absolutely, and I mean, I think they've got a clear path set there for the tapering. I mean, at the end of the day, they are still printing $55 billion odd dollars a month, so there is still a lot of stimulus being thrown at the US economy. The most recent comments from Janet Yellen, who took over from Ben Bernanke at the start of the year, she came out with quite a hawkish speech at her first FOMC engagement, but she came out a couple of weeks later and came out much more dovish and indicated that the labour market continues to have a lot of slack, and obviously they'll continue to support the economy as needed. But regardless of what she says and what other FOMC members say, the US economy is improving. They will continue to remove the stimulus, but they're not going to be raising interest rates anytime soon. I think the earliest expectation is around sort of April, May next year, 2015. So whilst they are removing the stimulus, their short-term interest rates are still basically zero bound at 0 to 0.25%.
Yeah, now that brings us on nicely to, I guess, to have a bit of a chat about what might be a new normal there. Obviously, in New Zealand, we've got a Reserve Bank that has just recently increased our official cash rate to 2.75%. Mm-hmm. They're expected to keep increasing it over the next couple of years up towards 5% maybe. Mm-hmm. In Australia, we've got a cash rate that's now lower than New Zealand's at 2.5%. Mm-hmm. Expectations are that will stay where it is for some time yet. And the US, maybe they'll start increasing, as you say, April next year, maybe, from zero. So what is all this going to mean? What's the new normal going to look like in the US, and where's it going to leave New Zealand and, I guess, our dollar with such higher interest rates in this country? That's
right. The US got hit pretty hard through the global financial crisis, and I mean that's been well documented. And a lot of analysts and policymakers do talk about a new normal for the US economy and US interest rates. And with interest rates there at effectively zero at the moment. Some are saying that the new normal in the US might only be a Fed funds rate, which is similar to our cash rate of 1 to 1.25, 1.5%. So you kind of look at that from little old New Zealand, where our cash rate's already at 2.75%, and our Reserve Bank is talking about potentially taking the cash rate up to 5%. And you compare that with the US, and you go, wow, that's a huge spread and differential between us and the US economy. And I mean, obviously, that's going to continue to provide support to the New Zealand dollar. The New Zealand dollar to the US briefly traded to a high of 87 cents during the month of March, so very, very strong there. We're just under 86 cents at the moment, but overall we remain very strong against most of the major currencies. So you have to look into the future and say, well, if this trajectory of interest rate expectations continues, the spread between New Zealand and US interest rates in due course within the next 12 months or so is actually going to be worse than what it is now. So where does that take the New Zealand dollar? Does that mean our new normal for the currency is 80 to 90 or even potentially higher. I don't know, but the Reserve Bank in New Zealand recently have made some comments about the currency and ultimately that exporters are getting more used to it and that it is becoming more of a fact of life. And I think to a certain extent they're quite true there. You're not seeing as much pushback from the exporter community around the high currency, and obviously the commodity guys are doing well, but at some time it will start to have a pretty big impact on our economy.
So, I mean, yeah, as you say, the New Zealand dollar at 86 US cents over 92 Aussie, and TWI above 80, which is, that's near record highs, which have obviously been reset recently. So we should expect it to continue at these levels through the balance of this year, largely?
Yeah, well, I mean, it is this. We're only at the beginning of a tightening cycle, and I think obviously the Reserve Bank is meeting again on the 24th of April. They will raise interest rates another 25 basis points, and the market still thinks that we'll see interest rates up another 50 to 75 basis points in the second half of this year as well. So. That's been clearly signalled by the RBNZ. How much of that is priced into the New Zealand dollar already? Quite a bit. I mean, I think your sort of wholesale market participants have already positioned expecting the New Zealand dollar to be strong this year, and it's already reflected in the fact that the trade-weighted index has hit all-time highs. The New Zealand dollar against the Japanese yen hit almost 90 the other day, so very strong against the yen, against the euro, the pound, everything. It's holding up very, very well. So whether or not we're going to see a new demand come into the New Zealand dollar when we actually see those interest rate hikes is going to be quite interesting in the second half of the year.
Yeah, now that brings me on to another issue that I was keen to talk about. Whether we're going to see a big sort of return of the carry trade with the Japanese housewives in particular being interested in New Zealand again. Obviously Japan, money printing up there, interest rates negligible. They've got a new sales tax that's come in there. So we're still hearing a lot about Abenomics and sort of trying to dig Japan out of a big hole. What's your outlook on that?
Yeah, it's an interesting one. I was talking to someone about Japan the other day, and I mean, they continue to be in a very, very tricky place from an economic point of view. Their interest rates are set at around 0.1%. They're effectively doing their own form of money printing, and they're expected to continue to do that. They've had the sales tax come into effect last week, which is expected to send their economy back into a recession this year. And then you look at little old New Zealand with our booming commodity prices, our booming business confidence, and interest rates on the rise. And you'd have to say, if you were an investor in Japan looking at the New Zealand story, it looks quite compelling. And ultimately, that could attract more capital into the New Zealand dollar in due course. Or you could have investment providers out there engineering products for overseas investors to attract them into the New Zealand dollar as well. So I think the carry trade is still relevant. Back in the sort of early to mid 2000s, it was more relevant, and it got a lot of those carry trade investors did get cleaned out during the global financial crisis. But I think we're on a much more stable footing. The overall outlook for the global economy is pretty positive, and in that sort of environment, when you're not getting paid anything on your money, in fact, inflation is eating it, is actually taking you're taking a loss after you account for that. Investors are going to stretch themselves a little bit, and the Kiwi looks quite attractive.
Now, we had, during John Key's recent visit to China, the announcement of New Zealand dollar renminbi convertibility. What is this going to mean? Is this a significant announcement?
Yeah, I mean, listen, I think politically it's a significant announcement. It says that we've kind of been put up the queue, so to speak, from the Chinese policymakers to get that convertibility. We were already able to buy Chinese yuan through selling Kiwi, buying US, and then buying the yuan direct, but this just makes it a little bit more efficient. Overall, we don't have a huge amount of liquidity in the New Zealand, in the market in general for yuan, and it's a little bit more clunkier to deal with from a trade point of view. So if you've got importers or exporters, they still choose to really price in US dollars because it is an easier currency to manage. But I think over time it's going to become a lot more common, and I think this is the start. I mean, China is already they've been been liberalising their currency for quite some time, increasing the trading ban, making it more exposed to market forces, and obviously creating these arrangements with other economies to convert their currency directly into ours. There's still a lot of capital controls in China, and it is still effectively a controlled currency. So getting yuan out of China is still requires a lot of approval from policymakers. So in due course, maybe that'll be freed up. But there's already enough money flowing around the world from China's investors from China. So maybe we want them to keep the capital controls in place for a little while longer. But we'll see what comes about from that. But no, I think, listen, I mean, the renminbi and the yuan, we're going to be trading that a lot more going forward.
And obviously there's talk too that's been around about the TWI trade weighted index, the yuan renminbi's in the 14 but not in the TWI 5. Reserve Bank obviously review this every year. They're doing that now. Suggestion is it may well be included in the 5. Do you think that would be the right move? And if it is, do we drop another one out, or do we make it the TWI 6?
No, I think it should be. I mean, at the end of the day, whether the trade flows that we have with China are significant. They are our largest trading partner. They are Australia's largest trading partner. So they're extremely relevant to this part of the world, and I think the TWI should reflect that. And probably we should drop one of our old European friends. I think they're talking about the pound, which is becoming less and less relevant to the New Zealand economy. So I would say that that's going to be something that the RBNZ will take into account and will probably start to look at.
And look, just finally, I was just keen to ask, we've obviously got an election in New Zealand this year, September 20th. Is that going to be a factor in regards to where the New Zealand dollar trades?
Well, it would be if there was more question marks around who was going to win the election. And I think right here, right now, the way the polls are stacking up, there's a pretty strong likelihood that we're going to continue with the status quo. And as far as the market and investors are concerned, they'll be pretty happy with that. So that's kind of business as usual if National get back into power. I think the main concern for the currency and for the markets would be if there was a Labour Greens coalition and what that might mean for fiscal and or monetary policy going forward. But right here, right now, it looks like National are polling pretty strongly, so the market's not really questioning the impact of a coalition at this stage. But absolutely, I mean, as we get closer to the event, it will be a factor that will start to get taken into account.
Well, thanks a lot for that, Dan. That's cool. Dan Bell from HiFX, and I'm Gareth Vaughan at interest.co.nz with our monthly currencies report.